Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1104th edition of Short-Term Trading Live with Oscar Carboni, and that, of course, would be me. Traders, I'm feeling really under the weather. I got off a plane from New York and just caught a weird bug while I was on it, so quick video, I just wanted to update you. This video is for trading on Tuesday, although that says Monday. Let's fix that. This video is for trading on Tuesday. That would be 11/12/13. Interesting date. Let's see what that means. Traders, you're looking at the 30-year T-bond U.S. weekly bar chart. I have been showing this to you in video after video, and I have told you that this chart seriously speaks volumes to me. Let me just say before we get going, futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. Never, ever trade these markets without protective stops. They are brutal. All right, traders, so 30-year T-bonds, this is a weekly bar chart. Each one of these green bars represents a whole week's worth of trading. Here's what I have noticed. You can go back and look if you want to do your own research. On a weekly bar chart, and the 200 bar moving average, which is this one. Bonds on the weekly bar chart do not stay below the 200 bar moving average for more than about 18 weeks. This is week 21. Week 21, let me show you what I mean. 18 weeks if you count them. We came near the average. We hung around for 18 weeks and had a blow off. Okay? Almost a year later, we come back towards the 200 bar moving average for exactly 18 weeks and have a blow off. A year and a half, almost 2 years later, present day, we build a huge bear flag. Here's the flagpole by all these days represented. Here's your flag. Under the 200 bar moving average, mind you. This is week 21 if you count them. 21 weeks below the 200 bar moving average. I assure you, interest rates are getting ready to go up. What does that mean? Trillions and trillions of dollars are going to come out of bonds. Certainly hundreds of billions are going to pour out of bonds. Unless you've got a better game in town, where exactly is that money going to go? I say it goes into the stock market and it goes up here. Where are the hundreds of billions going? This is the emini S&P weekly. You can do it on the Dow. You can look at anything you want. Where else is it going? I mean, unless you've got a better game you can tell us about. Comes out of bonds, it's going into commodities, it's going into stocks. Get ready for a big boom in all of the above. Then, of course, we switch to a daily for what we're going to do on Tuesday, and we've got this. E-mini S&P on a daily has a green omni. Hooray! Another green omni. Traders, we are back in my infamous Oscarism F flag. Sorry about my voice here, but I'm starting to lose it already. I am back into my infamous F flag. And, you know, I can remember changing this to Tuesday already, but we'll do it again. That's interesting. We're back in the F flag for trading Tuesday, 11/12/13 with the green omni, E-mini S&P daily bar chart. We're back in my Oscar's infamous F flag. We came out of it for one day, got right back in, had a little day, Veterans Day, holiday, bonds are closed, government was closed, banks were closed, so a small day. We're back into it as of Monday night for trading Tuesday, and we have a green omni, and I don't expect it to go anywhere else but up with a green omni. However, please have your stops in. This is a very dangerous environment. Because when we clear away everything else and just use our heads and say, well, let's be logical, what should happen? What happened last time we made an all-time high? Remember, none of this exists yet. Last time we made an all-time high and we hung around for too long, we dipped. Now we're having an all-time high, but we haven't hung around for too long yet. We just need to go up from here. So let's not say it's going to dip. Let's say the billions coming out of bonds has to go somewhere. Let's say it goes into the S&P, the Dow, you name it, those charts. That's where I think, in those markets, that's where I think it should go. And let's see what we get out of it. So, you know, we'll drop this F flag back here. It fits somehow like this. You know, you can play around with it a little bit, but it fits somehow like this. There are other ways to look at this if we really want to start drawing some lines. But you know what? Let's leave that alone for now. We'll just put our little flagpole back where it belongs. And Traders, there's something else that's quite interesting. I showed you those bonds, and just to go very quickly back, look at this chart. It's a very interesting bond chart. If you look at this chart and study it, recognize, something is definitely changing, because take away everything else on the bond chart, take away the flag, take away everything else, and this is a lot more time under the 200 bar moving average than we're used to seeing. Something is beginning to happen. Ben is beginning to walk away because his tour is done here as being our general and leader of the Fed. A new Fed president is coming in. It's going to get interesting, but we see something happening in the chart already. And then, traders, I've been showing you in my last video, in fact, it was called "A Flag is a Flag is a Flag." And how about a round of applause for that last video, traders? Woohoo! That last video was absolutely spectacularly right on target. And what happened here was that the market made another flag, and I told you about it and said we are going to start to break down in gold, and that is exactly what happened, like what happened here by this flag. And that was a very, very nice call for a piece of technical analysis. So traders, that's my presentation to you for tonight. For trading on Tuesday, make sure that you come on down to livewithoscar.com. Jump into my free chat room and allow me to help you understand the charts the way I've viewed them. And always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much, and I will see you at livewithoscar.com.